It's Tuesday, the 19th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Australia's biggest gaming group makes a near $4 billion bid for a UK group. That's our main story. Also today, long-term fixed mortgage rates set to rise, Queensland outlines its roadmap to normality, and the PM has a bob each way on climate change. Then stay listening for Sean's chat to Peter Colaccino from Infrastructure Australia. Infrastructure assets are hot property at the moment, but well before that, they have to be designed and built. It's a great chat. But first, Sean, Aristocrat Leisure will pay $3.9 billion to buy Playtech, a UK-based provider of software and content for online real money gaming. It is the biggest deal ever by Aristocrat.
Yes, Michael, they've got the approval of Playtech's board, and it will further entrench Aristocrat as Australia's biggest gaming group. In fact, it's a top 20 company, bigger than Woodside or Coles or James Hardie. And I bet most people don't realise that it's much bigger than Crown or Star or Tabcorp. Chief Executive Trevor Croker said it will push Aristocrat Leisure beyond selling gaming machines and developing online social games, that's where people don't use real money, into online real money gaming. That is a growing industry, particularly in the US as regulatory changes kick in. The price Aristocrat is paying is a 58% premium to Playtech's last closing price. That's pretty high, but obviously Aristocrat are pretty confident about the deal.
Yeah, seems so. Now, Aristocrat Leisure has a rich and pretty fascinating history.
It sure does, but would you expect anything less from a company that makes gaming machines?
No, probably not.
It was started by Len Ainsworth about 45 years ago. He sold poker machines to Las Vegas and then other parts of the world. He grew the business. Eventually, he had a massive falling out with other family members, including some of his children. It involved legal battles. And he then went on to start Ainsworth Game Technology, which became the major competitor to Aristocrat. Now, the 97-year-old Ainsworth is no longer part of Aristocrat, hasn't been for years, but big chunks of it is still owned by the Ainsworth family members. Now, I'm not really sure about the relationship between Len and his kids, but certainly a very colourful Australian company over many years.
Yeah, it's got all the makings of a Netflix series there, hasn't it?
It certainly does. He's a charming man, Len Ainsworth. I've met him a few times and totally charming and off-putting when you meet him because you expect something very different from this humble billionaire.
Yeah, absolutely. A fascinating story, that one. So how did markets perform over the past 24 hours?
Well, the S&P ASX 200 finished yesterday up 0.3% to 7,381 points. It's the highest finish in 3 weeks. The materials sector led the gains, with the battery metals companies doing well. Nickel Mines, Orocobre and Lynas Rare Earths all finished up around 5%. Commonwealth Bank and ANZ led the financials higher, while Rio Tinto was the best of the big miners. Xero, REA and Afterpay, all technology stocks, were among the worst performers, while property giant Goodman Group and CSL also went backwards. But, Michael, most of the action was happening in the fixed income market, and I know you love talking about bonds.
Oh, you know it.
Aussie bond yields jumped higher after the release of New Zealand inflation figures. The yield on 3-year bonds is now its highest level since February 2020. Remember, a rising bond yield means the price of the fixed income investment is falling. Most bonds do poorly in an inflationary environment. What's that mean in English for most of us? It means that longer-term interest rates, including mortgage rates, are going to start rising.
I'm glad you summarised it there for me, Sean. Thank you.
Away from bonds and equities, oil doesn't know when to stop. Brent crude was up again over the past 24 hours and is trading around $86 a barrel. There's been supply disruption due to Hurricane Ida in the Gulf of Mexico, but there's also a shortage of natural gas and coal globally, and that's got investors buying oil. The Aussie dollar is worth around 74 US cents. Bitcoin remains elevated, worth around $62,000 a unit. And gold is trading around $1,760 an ounce.
And what about overseas markets? What's happened on Wall Street overnight?
Well, Michael, it rose for the third consecutive session. The S&P 500 is now around 1% below its all-time high. European markets were lower. That follows comments from the Bank of England governor, where he said the central bank would have to act to keep a lid on interest rates.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty to talk about this morning. The COVID news yesterday was really focused on Queensland, even though the state hasn't actually had a case for more than a fortnight now.
Yes, it's been a remarkable effort and shows the health benefits of keeping borders closed, even if the economic benefits aren't so obvious. Queensland Premier Anastasia Palaszczuk said the borders with New South Wales and Victoria will be reopened for quarantine-free travel on December 17, once the Sunshine State reaches an 80% vaccination rate. Yesterday, after releasing the roadmap to normality, Ms Palaszczuk pushed Queenslanders to get vaccinated and said once 90% was hit, all restrictions would be lifted.
Yeah, it's good news, especially coming up to Christmas, and good news for the tourism industry. What about the other states?
Victoria reported 1,903 new cases yesterday, but also cut the isolation period for close contacts from 14 days to 7 days. New South Wales did that last week, if you remember. Victoria also announced a $55 million outdoor economy package. New South Wales reported 265 new cases. That's the best since early August. Premier Dominic Perrottet said case numbers and hospitalisations will rise, though, as mobility increases in the state. It's really the unknown in the reopening of the economy. How much will COVID spread, and what will that mean for health services and for the economy? Tasmania's snap 3-day lockdown ended last night. Good news down there. And the ACT reported 17 new cases.
And Sean, the national vaccination rate, this is pretty impressive, has almost hit 70% now.
Sure is. The ACT and New South Wales are both at over 80%, while Tasmania is at 69%, Victoria is 67%. The laggard is Western Australia. It has only 56% of its adult population vaccinated.
Yeah, a long way behind. All right, moving away from COVID news. As the internal fight within the government on net zero emissions continues, the Prime Minister's had a bit to say about the future of coal in Australia.
Yes, he said coal exports will gradually decline, not because of government decisions in Australia to adopt net zero emissions by 2050, but because customers such as South Korea and Japan will stop buying from us. He said the election of Joe Biden was a game changer in the climate debate, and clearly the alliance with the US involves a fair measure of support around climate change. The PM also told a Liberal Party meeting yesterday morning that the coalition would not increase its 2030 target to reduce emissions, saying the current 26 to 28% target agreed to by the Abbott government was an election commitment. It came as reports were circulating that there were potentially tens of billions of dollars in regional support programs on the table if the Nats came on board to net zero emissions, something they haven't done yet.
Sean, I don't know about you, but I'm finding it quite hard to figure out where the Prime Minister really stands on this at the moment.
He's sort of between a rock and a hard place with the Nats, and he keeps insisting Australia will reduce emissions through technology. His comments about a drop in demand from trading partners talks to that argument. But let's be frank, Michael, he's shown very little leadership on this issue. He's being squeezed by the Nats on one side and the US on the other side, and he needs something in his back pocket to take to the UN Climate Change Summit in 2 weeks' time.
Yeah, time is certainly running out there. Now, Sean, the boss of the newly listed Endeavour Group was out and about yesterday, and he conceded that some investors will never want to buy into the liquor and pubs business.
That's right. Steve Donoghue is running the Woolworths spin-off and was talking to the media yesterday. The group's been listed for almost 4 months and its share price is up about 8% in that time. That's not a bad effort. He said the pubs business was loving the easing of restrictions in New South Wales, no surprises, though it probably won't help Dan Murphy's and BWS. The group released its sustainability report yesterday. Now, that includes environment, society and governance. Already the retailer has been in hot water over its former owner Woolworths scrapping plans to open a Dan Murphy's outlet near Darwin Airport. And ESG, environment, sustainability and governance, is always a tricky one for liquor outlets. The group did say it plans to use 100% renewable energy by 2030, so it's got the environment part right. The governance part is pretty good, but the society part is where the liquor retailers run into trouble.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that Australian Mercedes-Benz dealers have launched a $650 million legal action against head office in Germany, claiming the parent group is forcing a change in business model that undermines millions of dollars in investment. Mercedes in Germany have introduced a global rule whereby dealerships become agencies with limited compensation, no negotiation, and no ability to recoup sunk costs. There are several media reports around this morning about Rio Tinto being at best incompetent and at worst deliberately deceiving of traditional owners over plans to blast the Yukon Gorge. That's according to a parliamentary inquiry which delivered its final report yesterday. The inquiry recommended sweeping legislative changes across the country to prevent a repeat of the event. The Australian is reporting that federal Labor leader Anthony Albanese has asked the Finance Department to investigate whether Labor MP Anthony Byrne used taxpayer-funded staff for factional reasons, which isn't allowed. And finally, Colin Powell, a US war hero and the first Afro-American Secretary of State, has died of complications from COVID-19. He served 3 presidents and made the case to George W. Bush that Iraq had weapons of mass destruction. He was 84 years old.
Running through some of the other stories around today, and the New South Wales Independent Commission Against Corruption inquiry began yesterday. This is over the rushed funding bid for an upgrade to the Australian Clay Target Association clubhouse in Wagga, which was pushed by then Sports Minister Stuart Ayres and then Treasurer Gladys Berejiklian. The trouble is that the clubhouse was in the electorate of Darryl Maguire, Ms Berejiklian's secret boyfriend, and he was pushing for a commission if the clubhouse got the go-ahead. In opening remarks yesterday, counsel assisting said the inquiry would investigate whether the former Premier exhibited the highest standards of probity. It's going to be a very interesting fortnight, Sean.
It sure will. We're going to hear a lot about that in the next couple of weeks. BHP yesterday said it could be able to extend the life of its massive Yandi iron ore mine in the Pilbara in Western Australia. The group said it had another 5 years' life left in the mine, though output would be lower. That's really important for BHP because the Yandi mine is known for its relatively pure iron ore.
Sean, a quick update on the Sydney Airport takeover bid. The airport said its suitor, a consortium led by IFM investors, had completed its 4-week due diligence period, but an agreement between the two parties hadn't been signed. The airport said its board is continuing to negotiate with the potential buyers.
Always interesting when they don't come out with a deal immediately. Doesn't mean it won't be done, but it does mean there's still quite a few hurdles to get over. Michael, there were also a few smaller takeovers yesterday. Gold miner Ramelius Resources will buy Apollo Consolidated for $138 million. That's another gold mine. Wealth manager Hub24 will buy software group Class for more than $300 million. Locally listed Cenex Energy's share price jumped almost 15% yesterday after Korea's POSCO International made a more than $800 million takeover bid. And my favourite, of course, Tasmanian whiskey distiller Lark wants to buy the Pontville Distillery and Estate in Tasmania for $40 million. Apparently, Lark wants to be the Penfolds of Australian whiskey. Now, I know nothing about the stuff, so I have no idea whether Lark is any good or not. Do you?
It sounds like we might need to do a bit of a blind tasting, Sean.
Excellent idea. Excellent idea.
I think so too. All right, how's this one for a mandate? Colonial First State has given a $15 billion mandate to BlackRock, the world's largest asset manager, to help run investment strategies across its default superannuation business. So BlackRock will run the 2 default MySuper products of Colonial.
And finally, Michael, Seven has reclaimed the ratings crown in the battle of the free-to-airs for the first time since 2019. But Nine says it's ahead in the key advertising demographic of 25 to 54-year-olds. It's amazing, Michael, how these free-to-air channels can spin figures. Anyway, Seven West Media has won 26 of the 41 weeks of the calendar year so far, giving it an unassailable lead.
All right, John, what's the key overseas news this morning?
Well, China's economy slowed to a 4.9% pace during the September quarter on the back of energy shortages, property sector debt and COVID-related shutdowns. It was about half the pace of the June quarter and well below market expectations. Of course, China is a big trading partner of Australia, and any slowdown in the world's second largest economy can hit this economy. New Zealand's consumer price index jumped 2.2% during the September quarter, much higher than expected. I mentioned earlier on in the show about bond yields rising as a result. Remember, the New Zealand Central Bank has already started lifting interest rates. Its annual inflation rate is now close to 5%, so there could well be more rate rises in the offing. And finally, there are concerns over what is being dubbed Delta Plus, a mutation of the Delta variant, which is spreading very quickly in the United Kingdom. The UK reported its highest daily jump in new cases on Sunday since mid-July. Weekly deaths from the virus have topped 800 for each of the past 6 weeks, more than any other European economy.
That's a bit of a worry. All right, up next is the Daily Interview, and today you're talking to Peter Colaccino from Infrastructure Australia.
Infrastructure is such a hot area at the moment among investors. We had a chat about what infrastructure was needed to drive economic growth, which hopefully at some point in the future might be investable.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 19th of October, 2021. Make sure you're following the podcast. Join us online on Twitter, LinkedIn and Facebook, and go to fearandgreed.com.au where you can sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.